Hey everybody, hey traders, Chris Pulver here. Welcome to the final hour. It is Friday, March 21st. I'm actually doing a video update today to post on my YouTube channel for the 3 o'clock premiere. Usually we're live 3 p.m. to 4 p.m. Eastern time for the final hour. I have a couple of webinars that I need to attend to today, so I'm just posting a video update. So it's around 1:30 p.m. We're going to do a spot check for the markets today, where we are at, key levels that I'm watching coming to next week. Next week, really, the major news would be just looking to see how the market stays either resilient, possibly hedged, or braced for April 2nd, which is going to be the big tariff day and call it quote liberation day um, per Donald Trump. So I'm looking to take some probably multi-directional trades on indexes for the April 2nd window, probably taking it out to April 17th expirations or the April expirations, maybe an end of the month. Just see if we have just a straight up volatility play. So anyway, let's talk about some key levels today. Major OPEX expiration, I think $4.5 trillion of options expiring today. Really wasn't a big mover overall. Here we are on the day. Started off very, very calm. I actually did not take a trade this morning like I usually do for my service daily profit play. We had a very calm, first 30 to 60 minutes of trading. We got a little bit up towards this gap fill, didn't quite get there. We're still kind of hanging out in the middle. This late in the afternoon, I'm like, well, could I take a trade? I mean, there could be some fireworks and some late day shenanigans before close today. The reason I stayed out of the market this morning was already 9 for 9 for the week on daily profit play, kind of day trading, and looking left on this chart for this gap and looking up to these highs on Wednesday and Thursday. I'm like, well, my sell side this morning was right up into this chunk, so it wasn't quite above the highs, and my sell side on the puts was not quite low enough. And I thought, well, if we have any volatility today, then both of those levels could get tested. If we make a run to the lows or the highs, I didn't want to see prices get tested today just in case there was excess volatility. So anyway, we are still negative on the day. The week carved out a minor, and I mean very minor green candle thus far, and the day is not done. So we're going to have to hold above this open right there to cling to green for the week. And you can go to a daily time frame and see that it's just a lot of indecision right to the 200 moving average. So we've had our big flush down. We put in that low back on Thursday the 13th. We had a gap up in this Friday move. We had a Friday to Monday combo. We have hit 1, 2, 3 levels right at that 200 moving average, which is why this line is around 5,700. To me, that's a good indication. If the bulls can break above, that's encouraging. If the bears do not break below, that's also encouraging. But this market until April 2nd might just be sitting here at a standstill. We'll see if there is a fight back at all. I could see just short-term relief coming back above this 5,700 zone, getting back into this bigger fib. That would be a high low. Let's say we pull back between the 38 and 50% zone. That's going to be SPX around 57.50 to maybe 58.30. So somewhere in that window would be a nice little equilibrium spot for the bulls to kind of settle in, and then the bears and bulls can dig their heels in and figure out who's going to win. I still think this market faces a lot of headwinds. Moving forward, I think earnings overall have been okay, but we are seeing revisions to the downside. We're seeing a lot less optimism in the market, and some of that's the extreme where we're getting some rallies here, or at least some stability off the lows. But I just don't want to play any games with the markets as far as if we break these major levels, if we break 5,500. From what I'm seeing on the macro landscape, the quote Fed put or the quote Trump put would be dramatically lower. And I don't know where that is. If we break 5,500, there's not a lot of support in this market. So if we break 55, there's not a lot of support until maybe September at 54, or possibly down here towards 52 to 51 to revisit this August low when we had a massive deleveraging event last summer. That was from July to August. So we could see a lot of volatility and a lot of accelerated downside move, which is certainly going to scare more investors. And that's going to put a pretty big dent in the momentum we've had for the last couple of years, since out of this 2022 low, this market has had a pretty nice gain. Now, that being said, if you consider this low to high or even this recent move, let's just talk about a couple of fibs. So if I take this low from 2023, this is a correction we had back in summer of 2023. I mean, realistically, I'm almost better off taking this low from 2022 all the way up to this high and just plotting some big levels. So let me do that. Let me do that right here. If I go from low to high, all the way up to the all-time highs, let's keep an eye on these fibs. So if we have a 30% pullback on this 2022 low into the all-time highs, that puts us right around 5350. Again, Fibonacci is just kind of an imaginary number, but it's rooted. You see it in nature, you see it in the markets. It's quite a nice behavioral level to watch. So this like 5350 zone could be something which would be just below the September levels, not quite at the August lows. Is it possible that we make a slightly higher low than the August lows? Yes, no, maybe. To me, I think what is interesting is the lineup here at the 38% fib and the 50% fib, simply because that's 5130, which is right back around the August low from 2024. And then the 50% zone is the previous all-time highs before we had the de-risking and de-leveraging in 2021, 2022. So to me, if there is more pain to come, if we have another slide lower, if we're going to face a deeper correction in the S&P, I wouldn't be surprised if we get to 51 or even 4,800. Now, it's going to feel like crap. I do wonder how aggressive the Bears take it there, but do we have the market that offers something like this? High, low, pause. We break this trend line. We have another rally up here that's faded back down. I mean, I have no idea how long it's going to take, right? I mean, part of me just wants to think, is the market just going to be quick and nasty and just super aggressive? And then from here, we look at a bottoming formation, and it takes time to build its way back up. But ultimately, that does put in kind of the floor. There's kind of your your quote Fed put, Trump put area, but that would be about a 20% correction in the S&P. And it's not going to feel good if we have that. So I am hedged to levels like that. I'm hedged all the way down here towards 4,800 on some option trades. A lot of it's pretty simple, just some bear put spreads, but I'm out to August, September, and December just in case. Obviously, if price drops a lot faster than that, then I'll be looking at trades where I'm risking about $1,000 to make anywhere between $4,000 to $6,000 on the upside, just to help alleviate some of that pain. But all that is kind of out in the future. That's maybe post April 2nd. How firm do we get with Trump? How ugly are things going to get with this tariff negotiation tactic? And the one thing I've said the last few weeks is, this tariff conversation, I understand that it is trying to re-cement the U.S.'s place as a global trade partner and try to make it where it's a little bit more equitable as opposed to the U.S. getting taken advantage of. I understand that. The problem is if we continue to dig our feet in or dig our heels into this, entrenched tariff talk or tariff war, it is kind of self-induced. And so right now, what I'm noticing is looking at something like copper that is ripping to the upside, and looking at the DAX in Germany, which is at all-time highs and one of the best performing indexes this year. Looking at the Hang Seng in China, which is up to a great start for the year. Looking at some of these non-US plays, I think I have a screenshot in here. Hopefully I can find it. See if I can find my non-US markets. Darn it. I'll have to see if I can find it here. Here we go. So this is a snapshot of non-US related plays for 2025. And you can see that there's a lot of things that are doing pretty well. Most of it's in Europe. Most of it's in China. Poland, Austria, large cap China ETF, that's FXI, Greece, Spain, Germany, Colombia. You've got some Latin American movement here as well. Chile, Italy, Sweden, Finland, France, Brazil, Switzerland, Norway, South Africa, Mexico, all in double-digit gains. You can go all the way down to Belgium, for crying out loud, and get double-digit gains for the year. So there's a lot of non-US growth happening, and a lot of flows that are leaving US, going elsewhere, possibly getting repatriated back into homelands. So I do have some exposure in China. I do have some exposure in Europe. I do have some exposure in Latin America. Brazil is a heavy one, but the LATAM 40 is a ticker ILF. And I'm doing some diversification with those plays. So they're off to a good start. This is probably making value investors very happy because they're right for the first time in years. I don't know how much further this climbs, but there is certainly a lot of momentum here. And again, I don't know how ugly things get with the U.S. I want to be braced to the downside. The U.S. is still, one of the largest, most liquid markets in the world. But if we are about to see a 15 to 20% correction, I want my money going elsewhere. I want trades to be hedged. I want to take advantage of opportunities. I want to take advantage of, U.S. stocks. If they're beat up bad enough, sell a ton of premium at high volatility so I can stay out of the way, and the expected move is far greater than the actual. But we don't know where these bottoms are going to be. And, that being said, I can paint this picture of how scary things are going to be with tariffs, but I could also say that, Maybe this Liberation Day is something that the market is almost priced in. And what we are doing is bringing countries and trade partners, even frenemies, to the negotiating table to then figure out how to make something more mutually beneficial. And the market might take that shortly after this April 2nd Liberation Day and rally on top of that. So I just think we need to be braced for either direction. I would say right now, based on the technicals, with the market closing below the 200 moving average and failing to get immediately back above it, that the bears are still showing signs of control. So I could see us chopping around in here where there's not really a lot of decisions. Anything to the upside towards this like 38 to 50% zone, that to me is a nice equilibrium level for then the market to decide whether we're going to revisit all-time highs or revisit recent lows. And I don't know. So, like I said, a lot of it's going to be option trading. A lot of it's going to be both directions. A lot of it's going to be taking some stabs to generate income. This week actually was pretty decent, 9 for 9 with daily profit play. So we just grinded all week. Had some winners on the following. Let me take a look here. If I go into my report for the week, here we go. So for the week, I had I had 4 winners on Chipotle this week with cash secured puts. I had also another winner on Chipotle for ratio spreads. I had a winner on Alibaba, winner on Amazon, winner on Netflix, winner on XLC for the sector, winner on Berkshire Hathaway, 4 winners on IBIT for a net profit on cash secured puts. Another winner on the Qs, another winner on the SPY, another winner on SPX. And I took 1 loss this week on DocuSign. That was a directionally neutral trade that I still don't think has given me either trade. Nope, it didn't go either direction. So it was right smack dab in the middle of where I needed it to go, and I took a small loss on it, and that's fine. And then I had, let's see here, a winner on Nike with 2 cash secured puts. So still active, still trading, going to continue to do that. That's my MO for 2025 is just continue to trade through whatever the market gives me. Be hedged to the downside, be prepared for the downside, take some stabs when I can, have cash at the ready, which I have. So still sitting on about a third of my account is in cash. So I have plenty of buy power to deploy, and I'll be watching that carefully. Tesla trading around 247, which is actually close to my break-even level. So I'm watching Tesla today. This is a trade that may be assigned over the weekend at the 255 mark. But if I get assigned, I have a ratio spread. You can see here that this 265 by 260 is up around $500. And then I have the 255, which is my assignment price on a put. So the way the math works on that is I would take the assignment if we're below 255. So that's where I get assigned, minus the $5 profit trap, and minus the $2.17 on the overall trade that I took. So I would own shares at 247.83, and right now we're trading at 247.10. So I'm not really that upside down in the trade. I'm upside down about $70 right now if I had the shares. So what I'm debating on is either going out 1 or 2 weeks and just putting on an aggressive covered call and trying to turn this into an income trade, which I certainly could, or if I want to go out a little bit more long term on Tesla, which has been a stock that's been beaten up. I'm not going to say that I'm not going to say the bottom is in, right? But I will say that at least in the near term, after the stock being beat up so badly, Tesla was down peak to trough around 55%. I could see a reasonable rally, back into the 260 zone, possibly back even to 280s. I mean, again, you can use just a simple fib, say this thing is overcooked to the downside. Does it pull back to the 23% zone at 280? Does it pull back to the 30% around 300? I'm probably not going to try to stick around and find out and be super greedy. But if I could flip this with ownership and end up making about $500 to $1,000 on the own shares, I will probably just do that. I still have some other income trades out into April and May to see if we do get above 255. But this is also one that if I took the shares of Tesla, it's a pretty good trade. I could lower the cost basis aggressively. And, medium to long term, I would say I still want to be bullish on Tesla. I think the wild card on Tesla would be that Elon Musk is so close to Donald Trump with Doge. Is Doge going to be still working hard and cutting and getting the permissions to do so, or are they going to continue to be kind of blacklisted or squashed or having to jump through all these hoops and hurdles in order to accomplish their $1 trillion in cuts or $1.5 trillion in cuts? Maybe they can, maybe they can't, but I don't think it's going to be easy. So unfortunately, Elon Musk is attached to a lot of this, and it's just a wild sentiment swing. Fair market value on Tesla, it was way overvalued, and we've come back into what is probably more fair market value around this 220 to 230 handle. So any push above is fine. Like I said, right now, I think it's a highly sensitive and highly volatile stock price. But I think if you look at the medium to long term trade on Tesla, which is it's more than just a car company, it's AI, it's robotics, it's cyber taxis, um, it's autonomous driving, it's possibly even in the chip space. There's a lot of good things for the future, but obviously it's very volatile right now, and I need to be prepared to take this thing maybe even into the the high 100s. We can get back to this 180 level, fill some gaps back here to the 150 levels. We could, I mean, heck, we can come all the way down to this low back in 2023, back into the 100 level. That would be a tremendous fall from grace, but if I'm not prepared to take my own shares down that low, then I need to make sure that I'm trading aggressive options around it to have some protection. So either an aggressive covered call or a collar trade. Either way, I think you get it called away for a couple bucks and walk away happy hopefully in the next maybe 30 to 60 days. So, but I wouldn't mind just dollar cost averaging, which I have. I've got some positions here. I bought a chunk of shares here. I bought a chunk of shares here. That break even is around 325. So if we get to highs on Tesla, I'm still making money on the shares that I have, but in this ownership position with this 111 strategy, if it goes lower, I'm still wanting to make sure that I can protect that downside. So overall, some expirations for today. We'll talk about some key levels. Let's go to the SPX, sitting right at that 200 moving average, and it's currently resistance. And going into next week, no major news next week other than core PCE on Friday the 28th. We're going into a major quarterly expiration on Monday the 31st. I don't really have tons of other news next week. Getting into your first week of April, you're going to have your Trump tariff liberation day, April 2nd. That's not an official news event. That's just what we know the deadline is. It's not just a tweet. It's not just conversation. That's going to be like when the government reveals supposedly all the numbers for these countries and trade partners that we have and how these retaliatory tariffs are going to work. And then Friday, we have a non-farm payroll event for the U.S., and we'll see if that's good or bad as well. Jerome Powell was this week with FOMC. He was somewhat reassuring to the market, but you can see that price was very muted, which makes sense because I think right now the market probably cares a lot less about what the Fed's going to do and a lot more about this near-term scare of what Donald Trump and company are going to do with tariffs and how much uncertainty the market's going to have to price in. There could be a lot of it. Let's go to the NASDAQ. So SPX, let's go NDX. You can see here that there's still room to get back into the same thing. So we had a pretty hefty correction. This was nearly 14%. Just get that. I'll try to get this spot on as possible. So high to low, around a 13.85% correction peak to trough. Is there room for the NASDAQ to fight back towards this 200 moving average? Again, even a very simple retracement from this high, this low, a little bit of a pullback into this 200 moving average, that finds the 30% zone, that finds the 38% zone perhaps. I could see the market finding that as a de-risking area between the 382 and the 50, and then selling off to revisit those lows again. So in the near term, I could see the market rallying into next week, at least coming off these lows and stabilizing. There's a pretty decent floor here on 19.4, and on the SPX, a pretty decent floor around 5,600. So those are some key levels right now on the SPX NDX. On your Qs, you're going to see the similarity there. We still have room to get back to, see those moving averages will load up. There it is. So the 200 moving average is sitting right around $490. So do we have a low to high, higher low to higher high? You can zoom in and see what I'm talking about. It would be something like this. Do we have a low here, high, higher low, higher high? So just a little swing coming back into this area before the market would potentially sell back off and revisit lows. But there's room to fight back. So if that happens this next week, it wouldn't be a terrible surprise. I think that would be this kind of equilibrium zone that the bulls and bears are going to fight it out. If you go to the Dow, same thing. Just like the S&P, we're sitting right back around that 200 moving average. Do we get a little bit above it, pull back to this 38250 zone, and then from there, bulls and bears duke it out, maybe another flush lower. The Russell, I have been selling some premium on the Russell. This is a trade out to the end of the quarter. This 190 strike, I don't think I protected profit on that yet, but let me double check here. So Tesla, let's go to IWM. This one is out to, okay, so I did take profit on that March 21st one, or March 31st one. That was for a win. And then this May 16th one that's out to May as well. So I'll see if that holds around this 190 handle. Which this previous lows around 197. So we'd have to break fresh lows on the IWM. If it's a bear trap, I mean, 190 gives me some wiggle room back down to this 190 level. Same thing here in May. So this one is profit. This one I'm still hanging on to. I honestly, I've said this all year. I don't love the Russell 2000. I'm selling some premium at these high levels, hopefully generating some income. But if I'm going to trade and have any exposure, I kind of like this trade better. IWX is a small cap Russell 2000 value play. This has been holding up way better than the Russell 2000 and even the top 200 growth, which I don't think I necessarily want to say that's the low. But if we have a, let's say, high, low, lower high, lower low, coming back to this, August low, coming back into previous resistance becoming support. This could be an instrument that offers up some medium to long-term opportunities if we come back to like 190 to 176. The only issue on IWY versus IWM is the options are not nearly as plentiful and as liquid, and premiums are not as good. So if I look left on this chart, previous all-time highs at 176. If we come back to that level, I would be pretty happy to scoop up some small cap top 200 growth in addition to see, if there's resiliency here in dividends, but same type of thing, just a little bit more of a corrective measure. So if it's something like this, where it's just a choppy environment, but it's a wedge, perhaps this does make its way back to previous highs and resistance, and this offers support, and then there's a longer term trade opportunity. I think for the Russell in general, we have to see the Fed starting to cut rates. And if the Fed is cutting rates this summer, starting in June, which is what the forecast shows, and we're cutting without the full-on recession feels of the market, then I do think that the small caps can perform pretty well, maybe later half this year. VIX should be down a little bit today. Yep, VIX turned red. So we've got the 30-day VIX, the one-day VIX, both down. Dollar index, SVXY came off nicely off the lows on that peak in the VIX around 29 and change. Dollar index catching a bid today for the last 3 days. That's not a huge surprise. I'd mentioned to traders this week in the currency markets, watching this area on the dollar index. If we get a pullback, pull back in here, look for another fade coming on the dollar. Again, if that dollar ends up fading, that probably helps yields maybe dropping lower. That probably helps currency markets watching an opportunity to be, near-term long the dollar, but I'd say near to medium term, look to fade the dollar and see if this is going to continue to head down towards range lows in the 101 to 100 level. Gap fill just happened today. That's good. Upper area, that's fine. Oil prices, I don't really have a good trade on oil. I'm still long natural gas. Gold has finally had a decent turn just on the day. It's just a nice little evening start at the top here. I still think gold has room to fall. I'd like to see it pull back to the 2150 period before I start taking any action. I have a trade up here that as long as gold stays below 3250, it's an income trade. I guess I'm calling the top, but it's a high probability trade for me. And I'd still like to add some dips. So the 21, the 50, even this previous all-time high back in October of last year, any dip like that in gold is looking pretty good to start dollar cost averaging back into it. Silver, similar, pretty good structure on silver, watching these higher lows, trying to scoop up some 200 moving average support. Bitcoin holding resiliency. I think a key level in Bitcoin is to make sure we don't do too much damage below 74,000. If we poke 74, maybe spike down to 70, you can see this trend line support going back into the lows of 2022. So if we hold this area, let's say we come down to like 69 to $70,000, as long as we don't do too much damage below that, I think Bitcoin can still maintain a buy market or a bull market. My concern on Bitcoin would be if this unravels more and we come down to retest this level. This to me looks like a scary bear pattern and a topping pattern that could end up being the the 60, 70, 80% pullback that I would imagine that most investors in Bitcoin right now are not going to love. Since the ETFs and kind of easier money has gotten into it and bigger money has gotten into it, that exposure could be pretty rough. And Bitcoin is a really good proxy for risk appetite. Bitcoin resiliency right now is kind of encouraging. It hasn't just fallen off a cliff. But I think we need to see this stability in Bitcoin to see if this becomes a good trade later in the year. If we just continue to fall and just slowly bleed out to these $50,000 lows, I just think that is a bear pattern waiting to happen. So there could be short-term opportunities from 50 to 75, but man, I would be concerned that we're going back down to like test 45, even test these big inefficiency levels in the 30s, which would kind of suck. But we'll see. Otherwise, it holds at 75K. We get on the right-hand side of this trend line, and we get a surge back up to the highs at 108, possibly have some new momentum highs. MicroStrategy still hanging out at $300. This is pretty much your leverage Bitcoin play right now. Coinbase, I'm watching this one as well. Chart alarm set at 195. I also may take some assignment on Coinbase for a trade that's going to cost me, be like a 189 cost. And could I do a quick aggressive covered call? Probably. Repair this for maybe $500 to $1,000 and get out. I'm not looking to hold on to this very long term at all. Same thing with Tesla. Just do a repair. Copper hanging in there. China is pulling back a little bit. Here's Japanese yen. Japanese yen, possibly a bull pattern in the making. It'll depend on monetary policy this year. But if we have the Bank of Japan still raising rates, this could be a reversal pattern in the making where we see a higher low and the Japanese yen has another potential deleveraging event through 2025. If that is the case, buckle up for some currency drama, buckle up for some central bank drama, and there could be some risk-off trading there as well. So this could be on top of everything else with Trump and tariffs. So there's a lot of things that are swirling around to potentially cause some uncertainty, and I think the most important thing is trading small right now, trading with good probabilities, and keeping cash at the ready for better opportunities and kind of like those no-brainer kind of outlier opportunities that don't come around very often. Okay, FTSE. Let's go. Let's see here. FTSE UK, DAX for Germany. This is the international markets. China pulling back a little bit. This is Brazil. I'm long Brazil and LATAM, so I just did some diversification with non-US plays. Mags, similar to the other, Q's example, we're below the 200 moving average. Do we get back to the 200 moving average? If the Mags, which has been down about 20+%, if we pull back to that 200 moving average, these companies are still large enough to have the entire market fight back. So if Mags can get back to this 200 moving average, that would be a percentage move, let's say around 3 to 3.5%. I think that is very capable of moving the entire market. And again, this could be a broad market rally, or this could be just individual stocks that are going a little bit higher. But if Mags all by themselves move 3.47, something tells me we can get the market to move too. So if this is a pullback and fight, that would actually be pretty encouraging. Okay, Apple. Steady. I mean, again, this is just representing MAGs, so I'm looking to see if MAGs pulls back towards the 200 moving average. Let's go here. Netflix, hanging on to that trade. NVIDIA, 117, just hanging out. I mean, I think we had a kind of an overdone NVIDIA trade. It could still go lower, but now you're betting against AI. You're betting against the future. You're betting against one of the most powerful companies in the world right now. Doesn't matter. It's a law of big numbers, but I did sell a bunch of premium. I got some ratio spreads, and I'm just watching NVIDIA. I've got $75 puts, $70 puts. I sold a lot of that premium when we had that big sell-off into the bottom in March. Tesla, watching carefully. I'll probably take the assignment, do a quick repair. Bonds, we had a gap higher on Thursday, but faded. I'm still long on bonds with a diagonal spread. It's a nice little diversifier play as well. What else we have going on? Futures, currencies. I'm still long against my Swiss crosses. Here's some China plays. JD has won them. As long as we stay above 40 bucks, I still have shares of Baidu. I have some puts on Alibaba. SEHD for dividends, SEHG for growth, SEHY for Europe and Asia. The advanced decline line, I'll leave you with this for the day. The advanced decline line is something to watch. If we see another leg lower in the stock market, one thing I'll be watching very carefully over the next, let's say, 2 to 4 weeks is if we see another leg lower in the stock market, do we see the broader S&P coming back down to what could be an attractive level? Now, everyone's going to be nervous and scared, but if you look at how well this has been a timing indicator over the last, 10, 15 years, anytime we've seen most of the S&P stocks, at a very low percentage of them above the 50-day moving average, that's offered an incredible buying opportunity to time this market. So my point is, if this Trump tariff talk does push the overall indexes lower, a good timing mechanism would be that this market breadth feels kind of the most pain around these lows. So watching this S&P above the 50-day moving average, watching the NASDAQ above the 50-day moving average, and if they start to retest some of these key levels we've seen over the last 5, 10, 15 years, to me that's a good timing indicator to show that the pain is being felt. It's going to offer up buying opportunities, and as far as timing the market, you get some really, really good prices here, as opposed to waiting for the coast to get cleared. This thing starts to bounce hard, and all of a sudden, bulls are finally confirmed after some really, really strong trend bounces. Does that make sense? So key levels to watch. And if this flush down happens again, then this is a good timing indicator, in my opinion. I think that would be a level to look for that, kind of that Trump put, Fed put situation and see if the market could put in a strong low. Elsewhere, Nike, I put in some puts today on Nike. I took some profit on a 321 expiration to get out before earnings. Earnings actually was positive on Nike, but the stock actually dropped. So I went ahead and sold some additional premium. I did that here for a December trade out for another, $500 of premium per contract. So I'm selling a 55.50 and 47.50 put. MasterCard, Visa, Amex, watching these carefully. I have a couple of ratio spreads on Amex. Johnson Johnson's my healthcare plays. Pfizer, Johnson & Johnson, insurance plays on Progressive and CB. These are doing fine. This one I took profit on. This one I've got a profit running out to May. Palantir, ratio spreads out into April. Uber I put a trade in right here, willing to own some shares if it comes back to $60 or less. We're trading at 75. Unlikely to get assigned here, but most likely going to be an income trade. And then Lyft, I put in a fresh trade today. I just bought shares. I'm willing to ride this down towards the lows in 850. If that is the case, that's fine. I will buy more shares here and probably take a 100 and 100 share chunk, and that would be a break even in like the tens. And I'll try to ride this back up towards $19 or $20. Fair market value is in the 30s on Lyft. I like this gap area between $23 and $29. We do have earnings coming out in April. So I think it's in April. This is earnings April 30th. So if we have a positive move in Lyft, I'm trying to get this thing back into 18, 19 bucks and get, $7, $8 a share. If we go up any higher than that, I'll try to hang on to it, probably sell some premium. But I'm just taking a chunk there. Sectors, currencies, here's your currency strength chart on the day. So today things are relatively calm on the currency front. Dollar is strong. Aussie's coming back. We got a lot of chop in the middle. Not really a crazy extreme one way or the other. We had some volatility yesterday. Big move on the Aussie, New Zealand, and weakness. And then today things are a little bit tighter for this Friday expiration to wrap up the week. So that'll do it for this little final hour video recap. Again, talking about key levels, what's on tap. Next week calendar, mostly core PCE. Does the market stay resilient? Do we get a little bit of a pullback towards those 200 moving averages? Is it resistance? Can the market get slightly above it? Again, I'm trying to keep the technicals really, really simple. If the market shows that it's not really willing to claw any fresh lows without another push from Trump or another catalyst, then any type of, and this might, honestly, this market might just do this. This market might just chop around here all next week until we have more clarity. Core PCE might not be much of a mover. The market may not be able to get to the lows. It may not be able to do much above the highs. So I've got to watch that as well. But if we do have a little nudge to the upside, then this pulls back into that equilibrium spot that I talked about. I would be prepared for another kind of flush down and retest if this market's going to experience a little bit more pain. But there's definitely a lot of uncertainty ahead, and I'm just going to continue to trade. I've got to trade through it. There's income trades. I've probably been, as aggressive or as active as I've been in any time in my career, just because one way to still make money in a downturn is to trade through it. That's included hedges. That's included bear trades. That's included, out of the money premium selling. That's included day-to-day trades was now at 0 DT. You can be pretty active. So we have a nice little hot streak running 30 for 31. These last 31 trades have 30 winners. That pads the accounts a little bit. And I'm always looking for my 30 to 60 day windows as well for some swing opportunities. So I'll let you go there. It's been about 33 minutes. I appreciate everyone watching this final hour video update, and have a fantastic Friday and a great weekend. And we'll be back very, very soon. Take care. Bye.